Question: will AI change the way we invest forever? And while ChatGPT thinks about the answer to that question, let me take you through some of the reasons that I think AI might not have quite the impact that you think it will on our investing habits. First up, personal finance and investing is personal. Everything depends on your own goals, needs, requirements, how much money you have now, how much money you want in the future, and even how lucky you get as an investor during your lifetime. As intelligent as AI might be and might become, there's nothing that's going to change the fact that you still need to make a decision based on your own circumstances. Sometimes they might be good decisions, and sometimes they might also be terrible ones, but either way, you're still in the driving seat. No other person's responsible for your finances, and funnily enough, ChatGPT at least is very careful to not give investment advice and sticks to pretty standard responses when you ask it this question. Who knows though, maybe in the future when the next version comes out, you can get your own personal Warren Buffett. Here's one that I asked an AI art program to make for me of the big man himself if he was half cyborg. He looks a bit unhappy, but I'm sure we could make a mean team. Now, one of my favourite quotes about predictions is the classic one that says, "It's tough to make predictions, especially about the future." And this will forever remain true, especially when it comes to predicting the moves of something like the stock market. Now, while we're pretty good at predicting things like the weather as our technology improves, or how many inches the US and the UK are sliding apart because of tectonic plates, we're just not so good at making predictions about a system that is, by its nature, very unpredictable, like prices of stocks on the open market. Now, as I've said before on the channel, I always compare the stock market to some crazy sports stadium with loads of players all around the place, all playing different sports and different games. Nobody has any idea what teams anyone's on, what the score is, and why some people aren't wearing any clothes at all and just running around.
Assemble.
As another famous saying goes, in the short term, the stock market is a voting machine, and in the long term, it's a weighing machine. Some people are really interested in the short-term game and will make really fast trades with computer algorithms to get those tiny differences, whereas some people will only bet against the market and make money when prices go down, and some people don't really care at all and just continue their strategy no matter what. A lot of you out there might just invest each month automatically and not care about the price, and some of you will sell each month to pay for your expenses and bills. We're all playing a different game, and the future is well and truly unknown. As a reminder and a great example, just think about all of the major stock market crashes and events we've had take place in the past. Those are mostly black swan events that come out of seemingly nowhere. For example, do I have to remind anyone what happened in 2020? And can you find me an economist who's managed to accurately predict the rate of inflation, GDP, or pretty much anything to an accurate level across long periods of time? I mean, go ahead and let me know in the comments. Okay, so this is an interesting point, and I've got no doubt that at some point in the future, or maybe even right now, some algo trading bot is making a killing on the stock market because there's some pattern or certain trade that works more often than not.
60% of the time, it works every time.
However, let's just level the playing field and say that from now on, we've all got these amazing AI tools that emerge in the future. We've all got one of those Buffett 3000s that I made earlier. Oh, and he's waterproof too. He can come on holiday with you and he can swim. Didn't think you'd see that on a YouTube video, did you? Anyway, if we all have the same tool, let's just run a really basic scenario that says we're going to buy and sell a stock to make a profit each day, as we've seen that every time a stock drops below $90, it then almost always goes back up to $93 or something like that within an hour or two. Now, I know this is a stupid example and way too basic, but just bear with me, the point still stands. If we all set our Buffett 3000s to place an order at $90, then what will happen is that the price we end up paying will move very quickly upwards if there aren't enough people to sell it to us. So some of us might get the order in fast enough, but many of us might get $91 or $90.75 just as an example. And then on the selling side, let's just say we want to get to $93 each for our shares. Well, if we all sell at the same time, some of us might get lucky and get $93, but many of us would be too late, and slowly the price of the stock would go further and further down, reducing that gap. So you see the problem. Now, what some of you might do is tweak your AI to say, okay, well, I want to get ahead of that by 1 or 2 cents and make my order then. And this sounds really smart, but then other people will start to do the exact same thing. So before you know it, that obvious gap or pattern that you thought could work every time suddenly just ends up costing you commissions and you make no money. Here's a thought. Speaking of investing and the power of algorithms and computers, wouldn't we expect the biggest and best investment funds in the world to be just all run by computers if this is the way forward? And while some use lots of clever programs and there are some very successful quantitative funds, it does come back to the person behind the controls to really make that final decision. Hey, things could change, but for now, I wouldn't hold your breath. If you're an investor, let me ask you the question, how many times you've regretted doing something, whether it's selling one of your investments or maybe even buying not enough of that one stock which ended up doing really well. And also, while you're there thinking about it, when you made those decisions, how many of them were driven by your emotions? And if we're honest, I think we already know the answer. Were you afraid that you were missing out on the way up, or even scared that the market was going to crash so you sold out all to cash? Now personally, I've done this way too many times that I'd care to admit in the past, and I've made all kinds of bad decisions. Many of the world's best investors, who I'm pretty sure aren't cyborgs, often tell us that we need to avoid getting our emotions involved when it comes to the stock market, because as soon as our emotional brain takes over, all bets are off and there's no way we can make a rational decision. Peter Lynch, a legend in the investing world, has a great quote on this, which luckily we've got the video of.
This is a very important rule. This is one of the key rules. The stock doesn't know you own it. Remember that. You could be a miserable person. You could have, never helped anybody, never done anything right, had 67 spouses, never done anything right. If you own Coca-Cola the last 50 years, it's gone up 300-fold.
It's pretty funny when you think about it, but your investments really don't care about you. So don't invest in anything into loving them and getting caught up. That's an easy way to start making some pretty bad decisions. Another great lesson from a non-AI investor is Charlie Munger, and I've used this video clip before where he says,
in fact, you can argue that if you're not willing to react with equanimity to a market price decline of 50% 2 or 3 times a century, you're not fit to be a common shareholder and you deserve the mediocre result you're going to get.
So there you have it. And as easy it is to tell people not to get emotional about things and stay logical, try telling that to someone who's angry at you for not putting the toilet seat down. I don't think that this is a bold prediction at all, and no matter what happens in the future, some of the basic ways the market works aren't going to change. So for example, let's just say that the total value of the whole stock market is $1 million, just to keep things really simple. And you own a really small part of it. In fact, it doesn't actually matter what part you own. Now, 1 year later, the total value of the whole stock market is now $1.1 million. So that's a 10% increase in the value. The stock market's had a pretty good year, I think you'll agree. Now, how much do you make as the investor? If you say 10%, you're not quite there, as you're missing out one small but very important thing: fees and charges in the middle. Now, as the legendary John Bogle of Vanguard puts it, our returns that we actually get are from the total returns of the stock market minus any fees, and the lower the better we keep those fees, the better. Now, AI might power companies moving forward and help them make lots more profits, which in turn could push the stock market higher to new all-time highs never seen before, but whatever happens, you can only get back the returns of the market minus those fees. Now here's an interesting point and something we can think about. Will AI make our fees cheaper or cause them to go up? In an ideal world, we'd like to see those fees and middlemen get squeezed more and more, especially if they aren't adding anything to what we get back. But maybe our fees could be driven higher, which leads me very nicely onto my next point. There's a famous story from the days of the gold rush in California back in the 1850s where a newspaper publisher and general merchant becomes one of the first millionaires during the boom time. However, his fortune wasn't made from panning for gold or picking up an axe and cutting deep with the hope of finding his fortune. In fact, his money was made from the axes, shovels and wheelbarrows themselves. Samuel Brannan's story is part of legend that he became richer than any of the miners themselves, who mostly left empty-handed. The world of AI, I think, will make many people incredibly wealthy, and there'll also be many claims by people about how AI can make people lots of money, especially in the stock market. Whether it's an automated trading bot, some software to tell you when it's best to buy a certain stock, or even a tool to let you know that your portfolio needs to be rebalanced, I can see all kinds of promises being made. However, like in any industry in the early days, there'll probably be very few winners, and ultimately, a lot of effort and time will go into projects that will end up falling and failing and burning a shed load of cash. Now, funny enough, going back to our story of Samuel Brannan, even after all of his amazing rise to riches, he actually ended up his days pretty poor, He lost most of his money in some poor ventures and then got divorced, causing him to sell a huge amount of his assets at a really bad time in the economy, and the rest was history. So while AI might seem like a new gold rush, and I'm really looking forward to what's possible, just remember that there's no magic money tree, and if you're going to benefit, I'd rather be the one selling the AI rather than buying it to make me a better investor. I think Warren agrees. Now, unless we live in some weird new dimension where compound interest doesn't exist, I'm afraid that in order to build a lot of wealth by investing, the boring rules apply. Keep investing money over a long period of time into a broadly diversified set of investments, and with a bit of luck, you'll grow your money to the point where your interest alone will end up being greater than the money that you put in. You can see for yourself how powerful this is by running your own experiment on a compound interest calculator, or just by looking at people like Warren Buffett and seeing how over the years his fortune has grown massively, but especially in his most recent years as the amount invested become astronomical. Just for fun, here's an example with £200 a month for 30 years at a rate of interest of 7%. We end up with more than £245,000. And the best thing is that you can see here, after around the year 19 or so, the amount of interest we've earned now starts to beat our total deposits. Then the rest really is history until things just keep compounding and compounding year after year. Now, obviously the stock market isn't quite so straightforward, and you can go both up and down and sideways as well, but the point still stands. You still need to go and get money to make this happen and keep doing it as well, unless somehow you pick the best investment that makes all of these gains in a short period of time. If you could just drop that ticker in the comments, that would be much appreciated, and I'll let my automated trading bot know what to look out for. Isn't that right, Warren? Now, as excited as we can all get about the new world we're entering into, right now at least from a ChatGPT perspective, these are very early days and there are plenty of mistakes even with relatively simple questions. For example, I asked the ChatGPT which stocks have made more than 100 times their IPO price, and it gave me the following response. And while all of these stocks have risen by more than 100 times their original prices, the response and the numbers it's given just don't really add up, and it looks like it hasn't factored in stock splits. So for example, it says that Microsoft went public at $21 per share, which is exactly right if we convert back the splits. However, it then says that the price this week went to $420 a share, meaning that the price has only had a 20 times increase if we base it on that, when the reality is a 284 times increase. Now, I'm not really sure where it's getting the 420 from, as it's never really reached that high before, so clearly it's missed something out. Now, if the AI was really smart, it would have got a human to quickly Google for it, how many times has Microsoft done a stock split? And the answer would be 9 times, so just be careful out there. On a funnier note, you can have it write a nice poem about investing and AI. Although on the first time I asked it, it tried to rhyme wild with build. So I told it that it wasn't good enough and it apologized and came back with another one. Now, rather than read out the whole poem because we ain't got no time for that, let me just leave you with the last verse. In conclusion, don't take it too seriously. Investing can be fun, but not deliriously. Take a chance on AI, but don't get too bold, or you might end up in a financial stranglehold. Until the next video, happy investing.